Welcome back to Investing with Confidence. I am your host, Joshua David, having a good time talking about the financial markets with my good friend and my great pal, the mastermind, Mr. Al Connickson. Also, don't forget to subscribe to the Investing with Confidence podcast, wherever you listen to podcasts and on YouTube. So, Al, as we get into this final topic here, I guess continuing the same topic in the last segment of self-directing, I know you were a broker for several years, so you have a lot of knowledge, kind of how the brokers really work, as an advisor, what some of the things that they're doing and why they are doing them. Now, we know, and we talked about this in the last segment too, is we have a retirement crisis, and the system is not really set up for the average investor, right? So we're seeing more and more people want to learn the skills and techniques to actually manage their money, but do that with confidence. So let's just say somebody has, let's say an old 401k, or maybe an IRA they have with a broker or an advisor, and they're not 100% happy with what they're doing. They think they're a good guy or think they're a good gal.
That's often the case.
But right? They're not really doing what they want them to do. So what are some of the opportunities that people have when they have these retirement accounts?
Well, first of all, to understand that the opportunity to do this is there. And any of us can do this. We can have our own self-directed retirement accounts. You can have your own self-directed investment account. You don't have to use a broker or a financial advisor to participate in the markets. As far as your retirement accounts are concerned, the 401ks, that really was designed not as the go-to retirement account for people. That's what it has become for most people.
It was really designed for those high income earners as a tax shelter.
It was a tax shelter, exactly. That's exactly what it was intended for. But what happened is that all the companies that used to provide pension funds realized that they could eliminate the responsibility not only for returns, but for having enough money in there to be properly funded. They could just turn this whole thing over to a 401k, 403b kind of a setup where the full responsibility now is on the employee themselves. You're responsible for the returns or for whatever you have in that account. The employer is not going to make up any kind of a difference. So it became a great deal for them to pass off that responsibility. So you're really already your own pension fund manager. And one of the problems with those accounts is I mentioned the fees. That's a huge impact. That can take 40 or 50% of what you could have away from you. But it's missing one really important component, and that's opportunities to participate beneficially in a down market. In a self-directed account, you can do that. There are assets you can use. There are strategies that can be used not only in up markets, but in down markets and sideways markets. And even in your regular investment portfolio, if it's not a retirement account, you still have the opportunity to do that. We talk about shorting. Shorting is a way of making money or having the opportunity to, profit in a down market by borrowing something you don't have and selling it. But, there's some drawbacks to shorting for people. First of all, you can't do it in a retirement account. But there are other ways of participating beneficially in a down market. You have the opportunity to benefit by using options. Options can be used not only as protection for what you have, but also as a way of participating profitably in a down market. Also, there are exchange-traded funds which operate the opposite of what they're intended to mimic. For example, the S&P 500 has an exchange-traded fund. We call it the SPDR, SPY as a symbol, that should go lockstep up with the S&P 500 or lockstep down with the S&P 500. There's an inverse ETF for the S&P 500, and there are inverse ETFs for many, many ETFs, but it goes the opposite direction. So if the S&P happens to be going down, by buying an inverse ETF, you can participate the opposite direction. So that will benefit as the S&P goes down. So you have the opportunity to participate in all three market directions, which you don't have in an employer-sponsored retirement plan. So that's a huge thing. Now, one of the reasons that people don't do that is that they are afraid of controlling their own assets. But really think about it. You're already doing that in your employer-sponsored retirement plan. You are making those choices. Why not make those choices and not pay fees? Why not make those choices and have the opportunity to not watch your accounts go down when the market is going down? You have the opportunity to be protected and to participate potentially on the upside when the market's going down.
Yeah, that's the key, is to be able to potentially lower or eliminate fees. And Al, in these investing classes, you talk more about those opportunities that we have in up markets and in down markets. I mean, think of it this way: if you're listening now and you took a hit in 2008, do you have a strategy to protect from that happening again? If you don't, now may be a time to start to learn that stuff, because markets are at all-time highs. They could continue to go up. That's great. But there is techniques and strategies and ways where we can, as average investors, can protect what we have and potentially keep it rather than lose it in down markets. So it's just knowing and being able to sleep better at night, knowing that you're insured. I want to talk a little bit about, our sponsor, Online Trading Academy. They have this, large community of like-minded investors and traders, right? And that's what it's all about, is having a community behind you. That way you're not alone in the financial markets. Now, there's a great thing that they've created over the past few years, and the students are using a platform.
Mm-hmm.
It's called Click, and it helps them with their decision process, because it's all about having more comfort and more confidence in your trading and investing.
Right.
Let's explain a little bit what that Click platform really will help people, I guess, do in their guidance.
Yeah. One of the real advantages there is it has a positive impact on one of the things that really is critical for confidence and consistency in the markets, and that's controlling the psychological part of it, controlling the emotions. So Click really is a platform. It's a proprietary education, analysis, and trading platform designed by Online Trading Academy exclusively for their students. And it really, what it does is it makes you follow a set of rules. It's a step-by-step process that's incorporated there that makes you follow a set of rules. And those rules were put together by people that worked on Wall Street that understand order flow. They understand what impacts the price of something, the movement of price. And the Click platform is designed for the OTA students to manage risk and then to identify optimum trades. Those are trades that have the highest probability of succeeding. And it also sends an alert if you're trying to put together a trade or investment that violates some rules, violates some of the parameters that you have put into it, because it's kind of customized to each individual. And here's the great thing, we talked about the leveraged assets before. I'm sure some people are thinking, well, if that leverage can go in your favor, what about if you're wrong? The first thing that you put into Click as far as customizing it for you is the maximum amount that you are willing to risk on any trade. Maybe it's $50, maybe it's $100. Putting that into the Click platform, that Click then takes that into consideration. And it basically tells you, if you're violating that, it's going to tell you that you're violating it. So it's a platform that helps to take a lot of the confusion out of trading. It tries to simplify things, and it's the only platform I'm aware of that will actually tell you not to do something if it's not in your best interest.
Yeah, you're right. I mean, think of this as a GPS for your investing and trading. I mean, a lot of you listening may have use your phone for your GPS and may have a name for that lady or the guy that is telling you where to go. They're guiding you through your turns. They're guiding you through to your destination. That's what Click will help you do as an investor, is guide you through your investment decision process. So Al, it's getting close to the end of the show. And there are so many people that want to get invested in the markets. They don't know how. So a lot of people are brand new that are listening to the show here today that haven't done any trading in the past. There are a lot of people that actually have investments in the markets, like 401ks, IRAs, 403bs, TSPs, all those different retirement accounts. But they want to have sometimes maybe just a better conversation with their broker.
Sure.
Or have more confidence with what is happening with those, because people just don't know how they really work. And Al, we're helping people hopefully invest with confidence. And a lot of that comes from your great words of wisdom. Let's hear them.
Well, you know what? If where you are now is not where you thought you'd be at this time or where you want to be, and if making a change is important to you, what are you willing to do to achieve that change? It's your choice. The power to do it lies with you. You have to take the first step or just accept where you are. Remember, direction, not intention, determines destination.
Yeah, a lot of people want to make changes in their finances. And we talked about it in the show last week, the resolutions. And sometimes you may have to do things a little bit different. You have to have a different mindset, different strategies. And actually, the key to all that is having a plan. I mentioned in the first segment, if you have a plan, write it down. Follow the podcast wherever you listen to podcasts and on YouTube. Until next week, retire young, my friends.